Hey guys, this is Market Update. Let's see what's going on with this huge Bitcoin move. What is the reason for this? What are some fundamentals? Later on in the video, I'll go over all the fundamentals and where we are in the current cycle and what I think is going to be happening. So as you can see, a huge breakout of resistance. Like I've said, 31, this 30K level is the bull market resistance, right? Underneath that, we're still grinding. A decisive break we've now had. You can see this huge wick on this candle when we had the breakout. This is probably short positions, short traders taking short positions as we come up into resistance, hoping that the price rejects off. And of course, it isn't because of the fundamentals, right? People are coming in buying because of the ETF. And so those short positions are underwater as the price goes up, and then they turn into buyers themselves as they cover their short positions. A huge short covering here. And then a wick down as those shorts, actually cover their positions and then don't have to buy again. So what we're seeing right here is hopefully some sort of consolidation. You don't have to trade this. You can wait for the price to consolidate. But as we know, when Bitcoin moves, it really does. Now, we aren't in the bull market phase where it goes to new all-time highs right yet, in my opinion. That's when the Fed and other central banks print money. So we're not there yet. So we can just calm down. However, this is vindication for a lot of people saying that Bitcoin is still here. It is in demand. And so, of course, the fundamentals are very good. If we go to the day chart, you can see exactly what's happening here. In the previous video, I charted this descending wedge, which the breakout would be this. And we've actually reached it, right? So we've actually reached that target already by a long way. So, you don't have to trade these short-term movements, but everything is looking very good for BTC fundamentally, and the macro is starting to turn as well. So, this is it, right? This is the recovery and the thing that jolts people into saying, oh, wow, crypto isn't going away, right? And so, as we know, Bitcoin over the long term is just a stronger asset than dollars. And so it's going to, over the long term, go up in value, in my opinion. If you are a trader, check out the deposit bonus to Bybit in the description. Depending on your country, you can get a deposit bonus up to 30K. You can check the other details down in the description as well. ETF news obviously hotting up. And I don't think it's a sell the news thing, because this product is essentially like an IPO for Bitcoin, right? An initial public offering. So, usually with equities or technology products that are very sought after, they're private. And so you get venture capital in there that own it. Then you get an IPO on the stock market, a huge cash day for everyone that invested in the private equity as they, finally get liquidity. You get this huge price run up and everything's great and everyone makes money that was in early. Well, the difference with Bitcoin is that we're in early. We were buying early and a lot of the TradFi firms couldn't. So this is our Bitcoin IPO. And so there's a lot of, eyeballs on this. And as we know, when eyeballs come onto Bitcoin and crypto, the price goes up, everyone thinks everything's great. That's when people get complacent. So as I said, this isn't the bull market. That's when the Fed prints money. We're not there yet. But of course, you just have to have a long-term plan and not try and get into, Bitcoin because it's going up. You need to know why you're in. As we can see, iShares Bitcoin, this is on the Depository Trust and Clearing Corporation, DTCC. IBTC is the ticker for the BlackRock Bitcoin ETF. The SEC has accepted the rule change and list to trade shares of the Grayscale Ethereum Futures ETF as well. So you have the iShares, which is BlackRock's Bitcoin ETF, seemingly registered at this point. And if we go over to here, we can also see this should be the Ethereum ETF. The SEC acknowledged Grayscale spot ETH filing. This would be a conversion of the Grayscale ETH Trust into an ETH ETF as well. So it looks like from what we're seeing that both Bitcoin and ETH are considered commodities here, and so they'll both have ETFs. And of course, that means fresh money into these products. The ETF isn't bullish for Bitcoin. Bitcoin itself, because of the way it's made, because it's a ledger that you cannot corrupt, there's 21 million coins that no one can print more of. And if you want to try and fork the protocol, then the consensus of people will not support that. The consensus is that Bitcoin as it is what people want. Therefore, that's what it will remain as. And so the demand is there because of Bitcoin. The ETF is just something that happens in the growth of this asset. As more demand comes in, there are going to be more products and more firms make this available. This is the IPO moment though, because BlackRock, Fidelity, VanEck, all of that are doing this right now. So this is what we have been buying over the past 6 months for. And so latecomers are going to get worse prices. That's just how it works. Not only the ETFs, which are specifically great news for Bitcoin. Great for Bitcoin, looks like the ETH ETF is going to be great for Ethereum. Again, the ETFs are short term. Over the long term, which asset is going to outperform and give you the best returns? It's the one that is strongest and most demanded. I probably think that's Bitcoin versus everything else. But in terms of the macro, this is looking to change as well. And you're starting to see market participants, big ones, start to change their trades. And so this is what I've been trading over the past 6, 12 months, is actually going long risk when everyone else is going short risk. That's just how I want to play it. I'm a bit longer term. But as you can see, Bill Ackman, we covered our bond short. So they're no longer short bonds. There is too much risk in the world to remain short bonds at current long-term rates. The economy is slowing faster than recent data suggests. I actually tweeted back and said, bonds up, Bitcoin up. As bond prices go up, yields go down. Essentially, that would be fairly good for BTC. I actually don't think that interest rates are massively important long-term for Bitcoin. If they were, why is Bitcoin at an all-time high in Argentina and Turkey and others where they have crazy interest rates? It's because those currencies are not strong. And I believe that Bitcoin is a stronger currency than dollars. And so over the long term, it will outperform dollars. But over the short term, you can see it looks like the market cycle is starting to turn and market participants are starting to trade that as well. And so you should listen, because these people, obviously know generally what market cycles are doing. They have a lot of data, right? So if they think that bonds are actually going to go up in price and down in yield, that market condition generally pretty good for something like Bitcoin, and as an effect, the rest of crypto as well. Now we can see this data from Raoul Pal from GMI. This is his report recently. I'll try and link this below as well. Global liquidity cycle, as you can see here. Their GMI lead index tries to predict what will happen with the global liquidity cycle. As we know, global liquidity is important. The more liquidity out there, Bitcoin tends to rise in price. If it gets contracted away, Bitcoin tends to fall. So what they're seeing is we've made the turn from the drawdown in liquidity, and now we're going into more normal conditions for liquidity. I don't think that we need a crazy pandemic style stimulus for Bitcoin to do really well. I just think we need some more normality. And that's what we've been having over the past 6 months. That's why we've just been grinding up. A normal environment, even low growth, Bitcoin's going to outperform because it just simply has more fundamental growth than most other assets. And so, what asset do you want to be in, right? I think the best way to defend yourself is to buy the assets that are growing and are more powerful, and not take crazy defensive trades like buying, oil stocks or something like that. But that's just me. Obviously, everyone has their own way. We can see liquidity here. Liquidity bottomed 1 month later in October and continues to rise in year-over-year terms. You can see Bitcoin's bear market was pretty much the biggest drawdown in liquidity we've ever seen in our generation. But the bull market was way overdone as well, right? So again, we don't need to go crazy. We just need to return to normal, have some normality, and then we can think about Bitcoin outperforming. You can see this is a liquidity index again with the ISM, which is a lead indicator. You can see ISM has inflected to the upside. Global liquidity seems to be doing that as well. So potentially a rocky road, but more normal conditions. And then we're looking at inflation here, which this is the current CPI for this cycle. And this is the average of the 5 major cycles before this. You can see we're following the very same trajectory. So we could be down at normal inflation rates very, very soon, which means that the Fed doesn't need to raise interest rates. Maybe they can cut interest rates a little bit. Again, they don't have to go to zero, but a normal environment is much better for Bitcoin. Bitcoin can continue to outperform other large assets. If you have the Crypto Investor course, I'll be making some updates on my research towards the tail end of this year, so watch out for that. What I said in this video is pretty much what I gave course members in August and February. I've been waiting for this turn and it seems to be coming around right now. So check the link below if you want to check out the crypto course anyway, and the Bybit link if you can trade on there. I'm James, this is MoneyZG. Cheers for watching, and I'll see you in the next one.